Welcome back to The Explainer. So, you're an HDB owner in Singapore, and that big question is probably on your mind. What's next? Well, today we are breaking down a really practical step-by-step playbook for anyone even thinking about upgrading to a private property in 2026. So, if you're thinking about upgrading in 2026, you're really standing at a fork in the road. And let's be real, this is a moment of truth. We're not just talking about finding a nicer place to live. Nope. This is a massive financial decision, and it needs a super clear discipline strategy, not just crossing your fingers and hoping for the best. And this right here, this quote is the absolute reality check. The crazy post-pandemic property boom? Yeah, those days of easy money are pretty much over. The whole game has changed. Now, don't get me wrong, upgrading can still be an incredible way to build wealth, but you have to be so much more careful. The margin for error now, it's tiny. All right, section 1, the upgrader's moment of truth. And the big question is this move even right for you? Seriously, before you even open a single property app, we need to figure out if you're actually in a strong position to make this upgrade work. So, how do you know if you're ready? It really boils down to what we're calling the 3 pillars of a strategic upgrader. First, have you made some pretty significant paper gains on your current HDB? Second, do you have a stable dual-income household? And third, are you in this for the long haul? We're talking 10 years or more. If you can say yes to all 3, then your move is likely strategic. If not, it might just be a gamble. Okay, moving on to the market itself. Section 2, the 2026 market reality. And the key things to get here is that it's normalized, not crashed. So let's talk about what that really means. It's not going to be the wild ride we saw a few years ago, but it's also not the total collapse that some people are waiting for. It's a whole new ballgame. The best way to think about the 2026 market is mature and selective. So what on earth does that mean for you? Well, it means you can forget about trying to time the market perfectly to catch some massive upswing. That's not the game anymore. The new game is all about picking the right property. It's about quality over hype in a much more stable and, frankly, a much pickier market. So you've got to adjust your expectations. Here's what you should probably be bracing for in 2026. First, think single-digit price movements, not crazy double-digit jumps. Second, get ready for longer selling timelines. Your HDB might not fly off the shelves in a weekend. Third, you're going to see a huge difference between the really good projects and the just okay ones. And finally, all those cooling measures, yeah, you should probably just assume they're here to stay. They're the new normal, not a surprise anymore. Right, on to our next section, and this one is absolutely critical. Getting your numbers brutally right, your financial foundation. I mean it. This is probably the most important part of the whole process. It's all about building a super conservative, super realistic financial plan. This is where being disciplined will literally make or break your upgrade. Okay, so here's a super disciplined framework for figuring out what you can actually afford. And rule number 1 is ignore what the bank tells you is your maximum loan. Seriously, forget that number. Instead, follow these 3 steps. First, cap your monthly mortgage. It should be no more than 25 to 30% of your total household income. That keeps you safe. Second, you've got to stress test your finances. Ask yourself, if interest rates suddenly jumped by 2%, could we still handle the payments without panicking? That's your safety buffer. And third, after you've paid for everything, make sure you still have at least 12 months worth of expenses in liquid cash. That's your emergency fund, your peace of mind. You do these 3 things and you've basically built a financial fortress around your new home. All right, let's talk about one of the biggest questions every upgrader faces. Do you sell first or buy first? This is what we call the sequencing trap. And look, in a slower, more selective market like the one we're heading into, the advice is pretty clear. Sell your HDB first. I know, that might mean you have to rent for a little while, and that's a hassle. But trust me, the trade-off is huge. It takes so much risk off the table, it locks in your cash profit, and it puts you in a way stronger position when you're negotiating for your next place. Okay, so you've got your finances sorted out. Perfect. Now for the fun part. Section 4, choosing your upgrade path. We're going to look at 3 really solid strategic options for 2026. First up, Path A, the Outside Central Region, or OCR. Now, this is still the go-to option for most upgraders, but you have to be way more picky than before. The name of the game is fundamentals. You're looking for places with great MRT access and really practical, family-friendly layouts. What should you avoid? Those massive mega developments where you'll have 1,000 neighbors trying to sell at the same time as you down the road. The OCR is a great lifestyle upgrade, for sure, but you gotta be realistic about how much money you'll make from it. Okay, path B, the rest of Central Region, or RCR. If you can stretch your budget a bit, this is being called the new sweet spot. And here's why. Properties here are just more resilient. They hold their value better in both the rental and resale markets because they attract serious long-term homeowners, not just speculators. In a market that's not going crazy anymore, that kind of stability is like gold. And now for Path C, a strategy that so many people just completely overlook. Older private condos. Look, a lot of people get scared off by an older building, but that can be a huge mistake. The real enemy isn't age, it's bad design and poor maintenance. If you can find an older place that's been well managed, sits on a big piece of land, and isn't too densely built, man, you can get so much more space for your money. It's an incredible value proposition that's hiding in plain sight. This brings us to another classic dilemma. Should you buy a brand new launch or go for a resale property? You know, the whole new and shiny versus tried and tested debate. Well, in the kind of stabilizing market we're talking about for 2026, resale properties have a massive advantage, and it comes down to one word: clarity. With a resale unit, you see exactly what you're getting. You can walk the grounds, meet the neighbors, you know the deal. New launches, they come with higher prices and the risk of construction delays. For a cautious upgrader, resale just makes a lot more sense right now. All right, let's bring all of this together into our final section, the disciplined final playbook. This is where we distill everything we talked about into a clear, actionable strategy you can actually use. Before we get to the final steps, you have to understand the risks. These are the traps that so many upgraders fall into. First, don't overpay for potential. Pay for what the property is today, not some fancy story about a future MRT line that might never come. Second, beware of lifestyle inflation. Remember, you'll be paying higher maintenance fees, higher property taxes. It all adds up. And third, when you think about selling in the future, assume your buyer will be just as careful and picky as you are right now. Don't assume an easy sale. So, if it were me, here's the exact 4-step playbook I would follow. This whole strategy is about survivability, not speculation. Step 1, monetize those HDB gains. Sell it and lock in that profit decisively. Step 2, go hunting for a quality resale condo, either in the RCR or a really strong part of the OCR. Look for proven value, not hype. Step 3, and this is so important, buy below your maximum budget. Give yourself a financial cushion. And finally, step 4, plan to hold that property for at least 10 years. This isn't about making a quick buck, it's a long-term play. And you know what? That approach right there, that is how real wealth is built in Singapore property. It's not loud, it's not flashy, it compounds quietly. Success in 2026 and beyond isn't going to be about hitting a jackpot. It's going to be about discipline, about restraint, and having a really clear-eyed view of the risks. It's about playing the long game. And I think this final quote just sums it all up perfectly. Upgrading is no longer a default progression. It is an investment decision. So what's the big takeaway from all this? It's that moving from an HDB to a condo isn't just the natural next step anymore. It is a massive investment decision. And it has to be made with your head, not just your heart. So the final question you need to ask yourself is this: are you making a move that feels exciting for the next 6 months, or one that's going to be solid for the next 10 years?